Welcome back. This is Seewing Yee, and right now I'm going to share with you two things. If you want to become a highly successful small real estate investor slash landlord, all you need to do is these two things, and everything else does not matter. This is Seewing Yee, and let's get this show on the road. Here it is. This is what we call a cash flow analysis. This is a typical pro forma. So I said two things. First thing is identify a property. You match the projected rent on that property. You put 20 to 25% down payment and you get a mortgage rate. You get a buyer or builder rate buy down. You can, in this case, 4.75%, 30-year fixed rate mortgage for investor, right? 25% down on this nice mortgage rate, even though the real mortgage rate out there in the housing market is around at least 7% as we speak. So you buy the right kind of property in the fastest growing area, population growth and job growth, in this case, in Florida. Okay, I'm just giving you one example. And then the projected rent is around $1,700. You buy for positive cash flow. Does it have to be very high positive cash flow? Not necessarily. This is the reality of the investment world. This is the reality of the housing market. Bear in mind, okay, you know what's happening in the past few years, skyrocketing home prices throughout the country, escalating high mortgage rates, create a lot of challenges for a lot of home buyers. Also, real estate investor, this is the mindset. Two things, that's all you need to know. One, you find the right property at the right price, as in this case, this price point right here. You find a good economy, good migration pattern, job growth and population growth, the whole 9 yards. And then you get a property, out of state, whatever the case may be. So number one is positive cash flow. And number two, as you can see, the positive cash flow based on this scenario is $299 monthly net positive cash flow. Any positive cash flow is good in this day and age, especially when you buy a new construction property in the path of growth, in this case, Florida. If you have the confidence based on the rental market, or perhaps you may not know, right now is the best rental market history because we are seeing 37-year home purchase affordability crisis. This means more and more people are unable to qualify to buy a home due to rising prices in the past 2 years and rising mortgage rates, right? So therefore, there are many renters out there. Here's the deal. Here's what's going on. This is a 5-year projection. I'm not going to go over numbers by number. 5-year projection or longer is your rent is going to go up little by little over time, long term. So your cap is going to increase year over year, hopefully for years to come. Then, of course, then you're probably going to appreciate hopefully 5% year over year. So your equity going to increase. And then the greatest thing of all is you're able to leverage, you're able to get a loan for 75% loan to value, right? A lender can give you the loan to leverage your investment with only 25% down payment in this case. And the best of all is you're going to outsource. You're going to outsource someone by the name of a tenant who's going to not only going to pay down your mortgage over time, but your tenant, that $1,700 monthly gross rent, going to pay down all your monthly mortgage, as you can see right here. Your monthly mortgage is right here, $1,036. Your insurance, $61 a month. Property taxes, $331 a month. And some vacancies factor. Address the vacancy factor, the vacancy factor 2%, and the vacancy factor 4%. All those are factored in the monthly cash flow, and you still have a positive cash flow. There's a possibility that some of those tenants will rent your house 2 or 3 years at a time. Think about it. These people have the money to pay you. People paying you $1,700. They make about $50,000, $60,000 to $70,000 a year for whatever reason. When they're moving into this path of growth markets, as in this case, they will be renting for several years. Do not be surprised in the course of next 10 years on the 1-year annual lease, the average stay per tenant could be 2 or 3 years. So look into a 10-year projection then all you need about 5 or 6 total tenants occupying your property in the course of 10 years. Meanwhile, let's run through all the worst case scenario. What if there's a slight downturn or correction in this local market or any market, housing market, where your house may decrease in value on paper? Are you going to sell the property because of that? No, you are a long-term, successful real estate investor. You don't really care about the inflation or recession or housing crash, which is not happening. By the way, it's just a spoiler alert. What is going on in the economy? Because people would need a place to live. There are many renters. There are more renters than there are houses to rent, especially in a good growing area in the path of growth, as in this case scenario. So vacancy are expected to be very low and occupancy factor is very high. People want to move into this kind of area. They want to rent a nice single family home, brand new construction in a growing neighborhood in this sub-market of Florida, for example. Could be other places too. I'm just giving you a generic example. What I'm saying is that's all you need. You don't care about what's going on in the next few years of your houses. If you invest over time, 5 to 10 years or more, your property is going to do well. History will show you in real estate that if you invest a period of 10 years or more, your house will increase in value quite substantially, really, right? And then that's it. 2 things. Buy for positive cash flow. Doesn't have to be very high positive cash flow. The higher, the better, of course, but the rent will catch up, right? The rent will always eventually catch up with the skyrocketing home prices. That's why we are seeing relatively low cash flow compared to previous years. This is the reality of this market. But if you buy in a cash flow and appreciation market, such as in this particular market in the South and Southeast, in particularly in Florida, if you invest over time, it really doesn't matter. You can collect your rent checks. Your property manager can wire the money to you on the monthly positive cash flow. All you care, look, your tenant is paying all your debt service, all your expenses, and you still have some money left over at the end of each month in the name of a positive cash flow, a passive income. So you can survive all these years of potential volatility in the housing market, the economy, inflation, whatever the case may be. That in the past, this is the blueprint that successful real estate investors have used in the past. That's what I have done over 20 years. And I have consulted thousands of real estate investors using this blueprint, using this behavior, using this methodology. All right. So that's it. 2 things. Positive cash flow, rely on your cash flow over time, and who cares about what's going on short-term volatility, correction, whatever. So you stay the course, show commitment, show dedication, and you'll be fine. So thank you so much. Hopefully this helped. If this video helped you a lot or a little, any kind of value, please click the like button and subscribe to my YouTube channel and put your email into my website below so you can become our real estate investment member, free member of our investment community. And so you will receive this type of information as how you can achieve financial freedom as a real estate investor, regardless of where you live in the country. So thank you so much for listening. This is Seewing Yee. I will see you on the next video education update. Have a nice day. Bye-bye.